Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nikki Mirchandani. Well, Indian equities set for somewhat a weak start, tracking the clues around and also the absence of domestic triggers. GIFT Nifty signals a muted start for the last S&P 500 and Nasdaq ended 4-day losing streak. All eyes now essentially from the global perspective will be on the Jackson Hole symposium out there. Also, soaring yields leave Asian stocks struggling for headway. Talk about FIIs, they've sold shares to an extent of 1,900 odd crore, and DIIs, they have purchased equities to an extent of 626 odd crore. Now, stocks with highest delivery, that includes Maruti Suzuki, Torrent Pharma, Marico, Oberoi Realty and Godrej Consumer Products. These are some of the counters that have seen strong highest delivery. Let's talk about the FNOQs. FIIs, they've been net buyers in index futures. They've been net sellers essentially on the index options. And for stock futures too, they've turned net buyers along with that of Bank Nifty futures. However, for Bank Nifty options, they've turned in the sellers out there. Let's talk about the stocks that are currently in FNO ban. What still remains in ban? Chubbal Fertilizers, Delta Corp, Indiabull Housing Finance, Z, India Cement, JNFC, Hindustan Copper, SAIL, Punjab National Bank and Manappuram. These are some of the stocks out there. What is new in ban is Metropolis. What comes out of ban is Granules India out there. In terms of the PCR ratio, well, 1.07 compares to that of 0.98. But let's discuss some stocks and strategies now with Jay Thakkar, Head Alternates Research of Capital Market Strategy, Sher Khan. Morning there, Jay.
Hi, very good morning to you, Nikki.
All right, absence of local narrative out there, probably looking for global cues, range-bound trends. What do you make out of it? What does the PCR indicate to you? And what is the strategy that you'd suggest to our viewers out there?
Sure, Nikki. See, in yesterday's trading session, if you see, then the markets bounced back quite well from the lower end of the range. And we have seen that in this entire last 1 week or so, Nifty Bank has seen some support around the levels of 43,500, 43,300. Technically, the level is 38.2% retracement of this entire rise from the March lows. Right, Nikki? So 43,300 to 43,500 going forward would be a very crucial support. And interestingly, what happened in yesterday's session, and as far as Bank Nifty is concerned, is that it managed to, move beyond the levels of 44,000. In fact, it moved slightly higher, 44,100, and managed to close slightly higher, 44,000. So I would say that yes, Bank Nifty PCR has improved drastically. And we have seen good writing at 44, 43, 900, 800, 700, all of these strikes. And till now, 43, 700 levels are held on a Bank Nifty. I think that any dip should be utilized as a buying opportunity out there in the short term, targeting 44, 300 to 44, 500. As far as Nifty is concerned, I mean, that's struggling to close about 19,400. It's still, trading within that band of 19,300 to 400. But then, Nikki, I would say that yes, about 19,400. One can buy Nifty as well, targeting 19,500, 350 would be the stop loss on a closing basis.
All right, one can initiate a buy on about 19,400 levels. But let's talk about Reliance Industry. A little lackluster start coming in for Jio Financial Services yesterday. But what do you make out of it? What would you suggest to our viewers out there in terms of RIL and also Jio Financials?
Jio Finance is just listed, so I won't be able to comment out there. Yes, technically there is lack of data available there. But then as far as the Reliance industry is concerned, this stock is likely to trade within a narrow range, Nikki, of 2,400 on the downside to probably 2,600 on the upside. And that's the range for Reliance. And about 2,600, in fact, it has got a further resistance around the levels of 2,620 as well, which was its recent swing high around 2,630 to 33 levels. So that, yes, 2,633 on the upside to 2,400 on the lower side, that's going to be the trading range for Reliance for next couple of weeks now, is what I feel. This stock is not likely to do anything much on the upside or downside. It's just that it's the heavyweight, so whenever it makes a 3 to 4% move, it will make the move on the Nifty as well. Otherwise, if we're talking about a trending move in Reliance, that is unlikely. It's going to trade within this range of 2,650, approximately to 2,400 on the downside.
All right. Also, two recommendations out there for our viewers before we address the markets open and then go to stocks and news.
For sure, Nikki, I have a couple of buy recommendations. First one is on Dabur. FMCG Bank is likely to do some, good upside in the short term. So Dabur can be bought for a target of 580, 590 in the short term. One can place the stop loss at 558. I like Tata Consumers. The stock,
All right,
is
Jay,
like
we're just gonna hold on to that thought. We come back to you. First, we address the market open out there, 19,400 mark, comfortably sitting about that level with gains to an extent of 0.1% out there. Range bound trade, but remains to be seen if we can break out through the tight range that the markets have been trading thus far. Let's talk about Bank Nifty index just to see where that particular index. Well, we are seeing gains to an extent of 0.1% coming on for Bank Nifty too, about that 44,000 mark. And let's talk about mid-cap index and the small-cap index, which did essentially well in previous session. And in today's session, continues to outperform at least the mid-cap index. And in terms for small-cap index, let's see if there is more traction coming in for that one. 0.5% of gains coming in, nearly 0.5% of gains coming in for small-cap index out there. Let's talk about the other sectoral indices. IT, for that matter, it's a flat start, but with a positive bias. Essentially, it is a range-bound session of trade, but in absence of local triggers too, we're seeing that amount of probably range-bound trade coming through. But metal index right now is doing well, and it's up with gains to an extent of 0.5% out there. Pharma, it's a flat start with negative bias. Essentially, defensives aren't really doing too well in today's session of trade, be it FMCG, be it pharma, be it IT. It is a flat start for them. On the other hand, you have something like a metal which did well. Let's look at how the rate sensitives are doing right now in terms of auto, or for that matter, even the realty index, just to see if there is more traction coming in for the rate sensitives. And yes, we are seeing some amount of traction building up for auto. Banking index is doing well, and realty, that's another one which is holding the neck up in green with gains to an extent of 0.5% out there. Let's talk about the top gainers and the top losers that we have on the list. Adani Enterprises is the one where we want to talk more about. Of course, there is a bit of development there. And Adani Enterprises, Adani Ports, these are some of the top gainers that we have on the list, along with Power Grid. Apart from that, we are also looking at gains coming in from Coal India, Sun Pharma and JSW Steel. Let's look at the top losers that we have. HDFC Bank, well, also one of some of the top gainers out there. In terms of top losers, Maruti Suzuki, Reliance, Eicher Motors, these are some of the top losers, along with Bharti Airtel, TCS, IndusInd Bank. So essentially, Infosys, ICICI Bank and HUL, these are some of the top losers. So absence of local narrative, and you also see some losses coming in from the index heavyweight Reliance Industry, which probably has capped the upside gains for the equity markets. But let's address the stocks and news that you need to keep an eye out on today's session of trade. Adani Enterprises is the first. Of course, it's also the top gainer on the Nifty 50, where the founder firm has bought in 2.2% stake in Adani Enterprises. This has happened through open market transaction, and the date between August 7 to August 18. Besides that, it's also incorporated a wholly owned subsidiary to provide digital solutions and services. And the one on your list, Union Bank, where the bank has approved in fundraising to an extent of 5,000 crore via QIP. It's set in a floor price of 91.1 per share. It's the board of directors are going to be meeting in again on August 24th to consider and approve the issue price. Glenmark Pharma, a bit of perhaps positive coming in on that one, 0.5% of gains coming in. The company has entered in the pact with the US Department of Justice Antitrust Division, that's the DOJ. This is to resolve the court proceedings with DOJ involving any historical pricing practice by former employees relating to a generic drug, Pravastatin, between 2013 to 2015. It's also entered in a 3-year deferred prosecution agreement, and DOJ as per the pact which has come through between both of them, will dismiss any of the indictment if the company adheres to terms of agreement, which includes a couple of things here, right? Which includes the payment of $30 million, which is payable in 6 installments. Essentially, what it does is it removes the litigation overhang. The financial impact remains limited because the amount of $30 million, which is payable in 6 installment, also is pretty much limited per se for the company SJS Enterprises. Well, sources from CNBC are picking up that 30% equity worth around 541 crore will be exchanging in hands via a block deal. Evergraph Holding is going to be selling in up to 29.53% out of nearly 34% stake that they've been holding in the company, and Sanders Consulting too will be selling in another 0.5% out there through a block deal. So that remains to be seen, and the shareholding and how the lock-in dates typically have stacked up until now for these two shareholders is to an extent of November 10, 2024, but they've been selling in the stock today. It remains to be seen how does this deal shape up by the end of the day. But let's go back to Jay and check with him about the recommendations that he was talking before the opening day. Jay?
Nikki. Yes, Nikki. Can you please come again?
Yeah, sure. I was just asking you about the recommendation that you made before the opening market hours. Please go ahead and suggest the viewers out what can they pick up that can be profitable ideas.
Sure. So, as I said, that Dabur is looking positive in the short term. One can buy this targeting 580, 590 with a stop loss of 558. The stock overall has made a good impulsive move from the lower end, and it seems to have completed its wave 2 on a daily chart. Tata Consumer, the stock provided a breakout from a good consolidation, then has consolidated again after providing a breakout above this, and now it's trading around the levels of 848. I would say one can buy this targeting 865 in the short term, and the stop loss can be placed at 835. And the final stock recommendation which I have is on Titan. Now, Titan seems to have completed its 4th wave consolidation. It's been trending higher, and of course, sloping parallel channel. It has provided a breakout from a downward sloping channel as well. The 5th wave on the upside is pending, so I think Titan can be bought at the current market price. One can place the stop loss at 3020 and target 3150 to 3200 going forward.
All right, Jay, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, let's address the fundamental side. Well, the trade has been range-bound, but if you talk about the FII flow data that has come in thus far in August, India has attracted the highest flow when it comes to the emerging market basket. But to address more about the fundamental side of the story, we're being joined by Unmesh Sharma, Head of Institutional Equities, HDFC Securities. Morning, Mr. Sharma. Your
Morning.
Assessment of the equity markets right now, trade remains range-bound, perhaps lacking the local narrative. Most of the eyes are now on the global events out there. Earnings season has been passed through. How are you looking at the markets?
Yeah, so the hard work has to start now, because now with earnings out of the way, it's really as you rightly said, the global which is driving this. The flows have been very volatile. I think we had a great start to the year, especially after March, and then there was it's been going up and down. Broadly, though, you have to note that there seems to be the reason it's all got range bound is because the markets got very confused, and the reason for that is because at these valuations, not only in India but also in the broader equity markets, there seems to be some kind of risk aversion which has come through. I think the immediate trigger point for this was this ratings downgrade by Fitch, and now you may have noticed in the last 24 hours there has also been Moody's which has come out with something on the bank side. So broadly, what started to happen is that globally there seems to be a little bit of a risk-off kind of impulse going through the markets. Now, specifically to emerging markets, because you talked about that. While India may, it depends on what data point you are looking at. In terms of flows, in some India is looking very good. In some, in the recent past, there has also been time when outflows have been quite material. I think to a large extent that has to do with the fact that there is a lot of confusion about China and how all the countries are stacking up relatively. Now, India has done a great job, right? External vulnerabilities are much better than before. The balance sheets are repaired. A lot of hard work has been done to ensure that investments are in the right phase. Having said that, what's happened is that there are two cross flows. One is that the recovery in China was quite poor, and that is the number one weight in the MSCI Emerging Market Index. So whenever there is a flow in and out of China, India tends to get affected the other way. And the other is that currently, in the last couple of months, there seems to be a lot of, given that China valuations are quite reasonable compared to India, there seems to be a view that a little bit of positioning has to be done in China because the government there will invariably announce a slew of measures, so as to speak, to stimulate the economy. So broadly, we believe that this type of volatility will continue in the markets. I think global, as far as we are, dependent on global factors, we believe, volatility will continue. We don't see very clear case of material upside or downside from this level.
Speaking about material upgrades and downgrades for the quarter gone by, which were the sectors essentially that did well for you? Apart from OMCs, of course, which have managed to post in profits in the first quarter that perhaps is higher than the whole financial year put together.
Yeah.
That's one. But we've seen signs of a little bit of stress coming around from banks where there was a NIM compression. There have been a slew of downgrades which have come in for the IT basket, with Infosys delivering a shocker out there. What's your take? Which are the sectors that you are still going to go on given the kind of valuation that they're enjoying?
Yeah, so let me answer that in two parts. I think you've got most of the sectors right. I think, so overall earnings season, as far as we are concerned, was broadly in line with expectations. If you had to identify one theme, I would say that commodity consumer sectors were generally benefited. OMCs very clearly drove the upgrades, also autos and pharma in our case, at least for the estimates that we had put out, driven mostly by ONGC, OMCs and Tata Motors. Okay, so on the bank NIM compression, actually there are two things. One is that it was expected. So while yes, there may have been some houses on the street which have downgraded numbers, but our banking research team had been highlighting the fact that there will be NIM compression. In fact, a lot of management guidance was also in that kind of context. I think it's been in line with expectations. So while bank earnings growth has softened, we didn't get any material negative surprise from there. You could get the odd bank here and there, but broadly that is how it is. As far as downgrades are concerned, yes, IT was the one. The other is, off benchmark, there was chemicals, which saw quite material downgrades. Now, so overall, what we will say is that, earnings was in line. What we are now looking at FY24, so our earnings numbers for the entire year did not go up or down so much materially. So we continue to look at 14% growth for FY24. This obviously, in line with street practice, does not include oil and gas because we look at earnings ex oil. If you put the oil complex back in, then we are looking at 20% earnings growth for FY24. As far as what sectors to play to be able to get the upside, from here on a relative, this is going to be a tough year because if the macro is laid out the way that we are talking about, then we think that there is going to be a lot of alpha generated by individual sector. I think for the next couple of quarters, commodity consuming sectors would remain in play. But broadly, if you look at our model portfolio, what we are looking at from a 12-month perspective continues to remain large banks. So within the financials, we prefer the large banks, some specific smaller banks. And then we are quite positive on the industrials, real estate, and in fact, interestingly, getting less negative on IT now with the correction kind of coming in play, and pharmaceuticals. That's broadly where we are positioned at this time.
Mr. Sharma, you were speaking about that you're pretty much positive still on the large banks before moving on to other names like industrials. But don't you think disbursement growth has been a little higher now for NBFCs, and perhaps in this quarter, banks have started giving out the first signs of compression in terms of their NIMs. Would your preference now also, or let's just say, would you start also evaluating NBFCs more as compared to large sector bank, where the story is done and dusted and probably known out in the market? These are the pockets apparently that is, banks have done well for the last 2 years. But would you now consider NBFCs too?
Yeah, so look, you can kind of tell that we are broadly not that gung-ho about the market, right? So given the macro overlay, we believe that there is a little bit of risk aversion. There is also one very small thing, while we have not built it into our numbers, which we picked up, is that there is some very small, impact that we are seeing from small ticket loans. Now, honestly, while we are not negative on that as yet, we believe we want to watch that for another quarter or two before we get in. Also, if you look at relative valuations within a context of general risk aversion, what ends up happening is that, and the fact that margin pressure is something that we had seen coming, so we were not really caught by surprise. What we believe is that we would like to remain among the safer place. So, and which is why if you see, I'm from HDFC, so we cannot comment on group companies, but if you look at our overweights in our indexes, basically in our model portfolio is basically State Bank, ICICI Bank, and Axis Bank. To add a little bit of alpha to this kind of, on the down the risk curve, we actually have out of index position in City Union and Bandhan Bank. So we believe that covers the themes that you're talking about. Also, if you look at financials generally, you can also look at insurance, capital markets, so these type of plays. So that also on that ones also we have some plays in there. So that's how we are playing this.
In insurance, which are the bets that you're considering at this point of time?
So we have an overweight position in SBI Life and ICICI Prudential Life. And capital markets, we have ICICI Securities in there.
All right. Let's talk about the other sectoral bets in that case. Power has pretty much been the flavor of the season. And also with the pre-election year, we are seeing some amount of traction building in infra and the defense names also. What's your assessment on these sectors? Are you holding on to them closely or probably evaluating through the financials?
So power, yes. In fact, interestingly, we have kind of relative weight, overweight positions in of 2.5%. In fact, in power, NTPC, PGCIL, CESC. This is CESC being the off-index name that we have in there. But also broadly, if you look at industrials, what we've done here is that, of course, we have a slight overweight on L&T, which is the largest one. But we've also taken off-index bets on places such as Cummins, NCC, and GR. So that kind of covers the whole industrials bucket. If I also kind of slightly extend the argument, if you look at the domestics, I think on this type of old economy, if I may call it sectors, we also have we've also been quite positive for a while now and continue to remain quite positive on the real estate space. DLF, Soba, and Phoenix are the ones where we are positioned at this time in our model portfolio.
All right, Mr. Sharma, that's exactly what I was trying to ask you, but you answered the question. Thank you so much for taking out the time. I appreciate all the time and the efforts that you've given thus far.
Thank you. Thanks.
All right, let's address the IPO and the primary market. Too much is happening, and then we need to address the IPO of Aeroflex Industry, which is backed by the marquee name out there, Ashish Kacholia. It opens for subscription today, that is August 22nd, and it comprises a fresh issue to an extent of 162 crore and the OFS to an extent of 189 odd crore. Just to get a little bit of, understanding of what this company is about, it essentially is the exporter that is Make in India metallic flexible flow solution, which exports to 85 countries, getting more than 80% of their revenue on the top line performance. Essentially, the company makes for rockets, provide products for rockets, talk about the EV batteries, a couple of industries that they're catering to. We caught up with the managing director of the company in the studio, who took us through the strategies and the financials and the offering, explained us more about the company. Catch the slide of that conversation.
We supplied our product. It was used for the fueling of Chandrayaan. So, but yeah, our aim is then to supply our product which goes inside the rocket. So ultimately, when Chandrayaan, hopefully it will land on the moon.
This particular product is how is it used in the Chandrayaan mission? Talk more about it.
It is used for the fueling of. So the product that we had supplied, it was used for the fueling of the rocket. So so basically we helped fuel Chandrayaan, if I can say so. But our aim in the future is to supply our products inside the rocket, which is a more critical application, and hopefully we can see our product landing on the moon also someday.
Okay, so inside the rockets, inside the EV batteries. Okay, so since we are talking about long-term vision, now your revenue is approximately 270 crore.
Correct.
You said you're you're going publics for your aggressive expansion plans, apart from also taking care your debt repayment,
Correct.
which of course will be taken care. So tell us, in the next 5 years, what is the kind of vision that you have for the company in terms of the top line and the bottom line performance?
So in terms of, one thing is that we want to continue the pace of growth that we are seeing. The growth percentage that we have seen over the past 3 years, we hope to do the same in the future as well. Both in terms of the top line and the bottom line. Our vision is ultimately to, if anybody in any industry they require a flexible flow solutions, they should actually think of Aeroflex as a brand that they have to go for.
All right, that was Asad Daud, the managing director of the company, laying out the vision of the revenue growth of almost 4 times in the next 5 financial years. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with #MC Bullish on India.